Well, ladies and gentlemen, this is why external factors matter in the whole equation for AMC stock, and this is what I have been stressing. We are seeing a mass liquidation. No other way to put it. Everything is getting beaten into the ground. AMC actually looks very attractive, down 7.31%, when other stocks are down much more than that. And before we get into this video, how low AMC can possibly go, remember that song a couple years ago, how low will you go? How low will you go? Go low. That's all that is jingling in my head watching the charts here. So it's gonna get pretty crazy. We have our big catalyst tomorrow. I apologize for destroying your ears with my horrible singing, but let's dive into this video. Let's not waste any of your guys' time, because after all, your time is valuable. Hit the like button for me, consider subscribing to the channel, and if you guys want access to all of our trades in real time, we're doing our best to protect our portfolio. We did get some Facebook puts today that are up over 60% already. So that's the scoop with that. Let's talk about it. So AMC is down 7%, but we're still not at our lowest point. We did hit that low at $20.80 per share December 14th, and the same exact low as you can see right here just 2 trading days ago, and we're not really selling off straight down. You're seeing a lot of back and forth activity that is really going on. We'll, go down, bounce back up. We're coming down again, tested that low that we hit in the beginning of the day at about $21.33 per share, and we're bouncing up a little bit right now. So we're seeing a lot of strength. Believe it or not. Believe it or not. Once you do get close to $20 per share. That's where you're seeing buyers step in, and that is ultimately a good sign. But what's happening today? This is a mass liquidation. This is also a shorting frenzy. Everybody, all hedge funds are trying to protect their portfolios heading into Fed Jerome Powell tomorrow. The question is, and the only question that you should actually be asking yourself is, what do you think Fed Jerome Powell is going to say? And what do you think the markets are pricing in? Because the markets are a forward-looking instrument. And I love this analogy because it's the best analogy ever. And if you guys have just seen Don't Look Up, that movie on Netflix, imagine you knew an asteroid was going to hit in 6 months with a 99.7% likelihood of destroying the world. Even if it was 6 months away and companies are still bringing in revenue, whatever it was, the stock market would go down probably 85%, probably 90%. So it's a forward-looking instrument. So that's what market participants are trying to do, is price in what Fed Jerome Powell is going to say. He's not necessarily going, it's not an FOMC meeting. They're not going over data. They're not really doing any of that. It's testifying before Senate. But if Fed Jerome Powell is going to or wants to start selling assets like bonds, which when they sell bonds, it makes interest rates go up. If he wants to make any drastic changes, he has said very clearly and has been clear about this over the past, almost 2 years now, that they will not act until they give the markets a heads up. And that's what he's done every single time. So if Fed Jerome Powell comes out and says, yeah, we're raising rates in March and we're going to sell X amount of our balance sheet to raise rates even more to control inflation, that's, whatever he says, that's what's going to upset the markets. And I think if he says that he's going to start immediately selling assets the same time that he raises rates, that could definitely upset the marketplace. And if he says something along the lines of, we're going to keep selling every month, that's really going to be the dagger in the coffin that really sends us down lower. As far as AMC is concerned, yes, it would sell off with the overall markets, but the silver lining is you need that sell-off and you need that liquidity restricted before you will actually see the MOAS, the end game of the MOAS, because it dries up money in the system. Once the markets go down, people are losing money. Hedge funds, so they don't have as much money to service those margin calls once AMC does start to rally. So definitely watch this level at $20.80 per share. If we get a triple bottom on that penny, That's going to be absolutely crazy. But I think we're going to get a lot of support, in between where we are right now, $21.40 per share and $20 per share. Watch that move to about $18.50 if we do break under that tomorrow on another very red day. I don't necessarily think we will break 20 that strong. I think it's possible we could go to high, $19.60 per share or something along those lines. If we go down to there, then the markets are definitely bleeding. So that's basically the scoop. Fed Jerome Powell, I believe he does testify in front of the Senate earlier in the day around noon. So that's when you're going to expect to see a lot of that volatility, and you're either going to see a big bounce or just a big crater into the ground. So that's really all I have for technicals. It does not look good. So just put that out there. It does not look good. You still have this double bounce that is forming, but we have just an insane amount of catalysts this week, like bank earnings on Friday, the CPI numbers January 12th, and as well as Fed Jerome Powell tomorrow. So it's going to go Powell, inflation, bank earnings, just like that. And that's really going to set the stage of what to expect probably for the rest of the month. As far as the other data that you guys need to know, the Ortex data is giving us 17.73% short interest of free float, 91 million shares that are sold short. This number is definitely a lot higher. We have not seen any signs of shorts covering whatsoever, and the last exchange reported short interest data was about 19%. So I do not think 2% of the free float has covered. I actually think it's quite the opposite, that we've seen quite a bit of shorting happen with AMC. Share utilization is 76.16%. Days to cover, 2.48 days to cover. So this is still incredibly bullish, and eventually this correlation will come back like it always does when you see those big moves, with days to cover being really, really high and then the price being low, and then the price will go up and days to cover will go down, as it would be easier for shorts to cover once more volume comes in, once the price of the stock does go up and you get those FOMO buyers coming in. So that's key. All of this is bullish in my opinion for the end game, the actual short squeeze for AMC. It could get a little bloody in the near term. And on the call side, for calls that are in the money, you're only looking at 3,200 calls that are in the money, 80,000 that are out of the money expiring this Friday, but you do have 31,000 puts that are in the money and about 43,000 puts that are out of the money. This is the last week until this major expiration, January 21st. And depending what Fed Jerome Powell does say, if he doesn't forecast to us a lot of hawkish, verbiage that they're going to do said amount of bond sells per month or something along those lines, if he doesn't make the situation worse tomorrow, then I do think we're setting up for a strong week for January 21st expiration. I could be wrong, but thinking logically here, if the markets are pricing in Fed Jerome Powell doing something crazy during the March meeting, then you're likely to see that sell-off tomorrow. You're likely to see that continue. If you don't get that, it could be really good, just to straight line that. As far as the max Payne, you're looking at $24 by the end of the week. So that would be quite a substantial bounce right now. And if you are a believer in the max Payne theory, then you should be excited about that. I certainly wouldn't be gambling either which way. I personally don't short AMC or buy puts on AMC. But you could definitely see a little bit more downside here. I am playing Facebook puts. I might do some SPYs and some QQQs for the NASDAQ. Because when I say it's a mass liquidation, that's exactly what it is. Down 2.5% on the NASDAQ. Russell 2000 down almost 2%. Dow Jones even down 1.5%. And that's your rush to safety. S&P down almost 2%. And the VIX is up 21.5%. So lots of fear, lots of shorting, lots of selling. Margin calls are probably starting to be hit. And that's just how the markets operate. So that's the scoop on AMC. That's the scoop on the catalyst, the Fed, what's going to move the marketplace, and how low we could possibly go. To sum that up, 1850 is really where I would say the low is. I'm still thinking it's going to be very hard to get under $20 per share just because you're not straight selling off today. You've seen 2 bounces at $20.80 per share, and you're just not selling off at a rapid pace today. So that's basically the scoop. 1850, that's the level I would be watching if things really do get crazy. But first 20, because I don't think that will happen unless things really do get crazy, to be honest with you. There's a lot of support around $20 per share. So that is going to do it for this video. Hit that like button for me. Consider subscribing to the channel. Like I said, if you guys want access to all of my trades, link down below in the pinned comment for that. Love and appreciate you guys. Thank you for watching. I will see you in the next one.